Hi traders, Nathan Bray here from ACY Securities. I want to talk about the wheels possibly falling off this US dollar, up at pretty high levels at the moment on this dollar index. So what I'm looking for, first of all, technically, before we get into the whys, let's look at the what. So right now, this dollar index has broken above a significant weekly level of resistance, and it's held above there, okay, for the last few weeks. Right now, however, we're starting to see a lower top and a lower bottom fall back inside that range. So we are seeing some weakness here on this US dollar. But a few hours ago, some breaking news from the Treasury Department in the US. They're starting to do what they're calling a debt buyback program. First time they've done it in like 20 years. Okay, so this is significantly a sign of weakness in my view, in that they need to try and maintain enough liquidity to the market. It's like the market's starting to grind to a halt and the lubricant needs to be put back on those wheels. Okay, and there has been a lot of geopolitical tension, but it hasn't been enough, okay, to allow the Fed to come in and start purchasing more bonds. But the head of the Treasury is coming in and saying, hey, let's start a new program where the Fed comes in, provides the liquidity to start buying back all the debt. Now, this has come on the back of China. Okay, if you look at the data on China, they're offloading US Treasuries, about 22.7 billion worth of US Treasuries they're starting to dump. That to me is a real sign of weakness to this US dollar. On top of that, the BRICS nations are trying to work with the oil producing nations that are in their BRICS group to say, how can we trade without using so many US dollars? So we're seeing this global divesting away from US dollars at the moment. Now, on top of that, we've got a scenario where weaker data is coming out on the US economy, okay? And we're seeing also a scenario where there's talk of rate cuts on the horizon, and not just in the US too. This is in Europe, this is in Australia, this is in various economies around the world, are all suffering a little bit. And they're desperate for a rate cut. And they're not going to get it. Why? Because this dragon of inflation is still sticking around. And we've seen that in the recent CPI data, not only US and Europe, but a few hours ago here in Australia, folks. So economies are starting to get weighed down by the pressure, okay, of raising rates, which they did to fight inflation. But guess what? Inflation isn't going anywhere. So these are the main macro reasons or fundamental reasons that I'm seeing could provide a lot of pressure on this US dollar. So therefore, I am being very cautious about maintaining this weekly uptrend in the US dollar. And I'm really heavily watching this weekly level of resistance, okay? Because remember, folks, the one rule that I've always traded by is if the 10-year yield gets to 5%, things break, okay? Major events occur around the world. Think of it this way. If you've got $40 trillion on your credit card and you've got to pay 5%, on that, that's 2 trillion. 2 trillion a year you've just got to give to the people who've lent you money. How can you sustain that without bringing in third parties to start buying bonds to lend you money while bringing those yields back down to a more manageable level? Right now, the 10-year yield, folks, is up at 4.6. It's getting very close to that 5%. So for me, these are the sort of four red alerts going on in my brain. I'm seeing that the US dollar index is very high. It's putting in a lower top and bottom on the daily. It's failed back below that weekly range. And then you've got Treasury starting to want to buy more bonds all of a sudden in a bond buyback, which will be paid for by the Fed as a fiscal measure. Then you've got countries around the world, big trading partners, offloading US securities, offloading US dollars, and finding ways to not use as many US dollars. And where did those funds go, folks? It went into gold. Okay, and that's what we're seeing central banks do at the moment. So right now, as much as the trend on the long term is up, I am very nervous that this US dollar could weaken considerably. All right, we'll be away for Anzac Day, public holiday here tomorrow, folks. Have yourself a great end to your trading week.